What's going on, everyone? I'm sorry I have not made a video in a very, very long time. I didn't want to make a video just because I haven't been making videos because we foster as well, on top of everything else we do, and it's been a little bit crazy with that. My boys are in soccer. I coach one of the soccer teams, and so life just gets really busy, and I was really, really trying to get focused. So, quick update. I did pass my evaluations. Um, Everything was going pretty consistently, I would say. And then my subscription was about to renew, and Apex was having a sale at the same time. So the day before my subscription renewed, I just told myself, "Hey, I'm gonna get aggressive today, and if I pass, great. If I fail, no big deal. I'll just start back because I was only up about $200 to $300." So I traded the full ES. I was trading micros, and I got into a trade, and one of my accounts failed. So I had three evaluations. One account failed, but I had a trade copier. So when that account failed, it took away my brackets on the other two accounts. And I did the math, and I was like, okay, I need 37 points to pass my evaluation. So it came all the way down to 37 points. I manually closed the trade, but when I manually closed, I was like, I want to say $10 short of passing my evaluation. So I'm like, well, I'll get in real quick, and then I'll scalp out. So as soon as I got in, it immediately reversed. It went against me 27 points, and then thankfully it came back down to retest the lows, and I got out for real, and I passed with like $10 to spare on those accounts. So I am trading on funded accounts now. The other thing that's been changing is I trade on the hourly chart now, and on top of that, I trade gold futures, micro gold futures. So in micro gold futures, each tick is $1. So the reason for that is the ES has just been so volatile, and from what I've learned so far with gold futures, it's just a little bit more stable, and that's just coming from more of fundamental beliefs where I don't have a lot of confidence in the dollar right now and the U.S. economy in general. So gold futures is, I would say, typically more bullish. And I actually took a video last week. I just didn't post it. So this is my trade today, and we're going to go over the price action a little bit. I did take a bad loss, a really stupid loss, a couple days ago. It was actually my first big loss on my funded accounts. So I was up about $400 on my accounts, and then I took this stupid trade because you can't really see on the screen, but gold has been in this. Actually, I can show you my. See, it says PA right here. That means funded, in case anyone thinks I'm lying. So here's where gold has been for a while. So this is the last one to, well, if we count this, 9 days. 1, 2, 3, 4, 5, 6, 7, 8, 9. The last 9 days. So what happened was the other day is we had this crazy climactic bull bar right here. And the bad thing is I actually bought down here. When it started moving, I bought right here, and I got out for scalp right here. My context was, if you're in a range, the chances are you're going to stay in that range. So I actually put a limit order, I want to say like right in here, and I had my stop here. Well, obviously my stop got hit, so then I sold again, I think right here. It came back down a little bit. I sold again, and then obviously it went up. So let me just give context of what happened yesterday. Here's our daily chart. So this was kind of the area I was going for, and as you can see, it's been in a pretty good range right here. I mean, that EMA is flat. So we had this good breakout, and then this was yesterday, which is FOMC day, and I'm going to talk about that in a second. My other context, sorry, for this trade was, see how this bar broke above this one and then came back down? Let's call it outside up bar. So that means people bought above this bar. So if the trend really is reversing, the chances are people need to get out here, so most of the time it will at least retest that area and then come back down, which is what I'm going to show you right here. So today, or yesterday, what happened here was before FOMC, or I'm sorry, this is it. Here's before FOMC. I think I bought above this bar right here. So this is an hourly chart. Typically, if you're trading a smaller time frame and you have this tight range, you want to wait for breakout and then follow through. That follow through is not really that great. I think I got out like right around here with 3 points, and then this was the FOMC bar right at 2 o'clock. So this is a very special bar, I would say, because typically FOMC will give a direction either with trend or against trend, but as you can see from this bar, it's just a big giant doji. So this is an hourly chart. So within 1 hour, prices really didn't do a whole lot. They went way up as soon as FOMC, then they came way back down. They found support at the EMA, and it closed right here. So really there's like where it opened and closed was 4 or 5 points, which is not good. So the fundamentals behind that is that people, that's a lot of uncertainty. Big up, big down is always uncertainty, which is also means a range. The reason that this is a problem is fundamentally people aren't putting confidence in the market. So the Fed did exactly what they said they probably will do. And then they're like, everything's fine, don't worry about it, everything's good, don't worry about all the banks closing, everything's fine. Well, this is kind of like the BS filter right here. The market is not putting stock, no pun intended, in what the Fed is doing. So if gold goes up, the ES is typically going down. So basically what that means is you either have faith in the market or the economy, or you have faith in gold. And so what this says is that people did not like what they had to say, or they're just not buying it, and they're putting more faith in gold. So it actually closed on this bar. I closed my chart after this one because I'm like, oh, this is just a big mess. So I closed my chart. I was up like 30 bucks yesterday. And then this bar happened. Now, this is an inside bar coming off the EMA, very strong bull bar. That's worth a trade, but I didn't have my charts open. And then look what happened at after hours. That sucker shot up. You know, just from this bar, it moved 42 points. Or 40.2 points, which is a lot in gold. Gold futures. That typically the market is not that volatile, and it shot up big time. So that plays into the context for today. Excuse me. So here's what happened overall. You can see anytime there's every reaction in the market is typically an overreaction. But because of this tight bull channel coming off the EMA, I'm still bullish, and plus this huge wick right here. Now, why is there this big wick? Well, if we look at the daily chart, gold is at an all-time yearly, or I'm sorry, a yearly all-time high. Okay, so this is a big deal. Bears who have been selling are screwed, basically. They are now trapped in this trade. They're trying to get out. Those bears that are fading it are trying to get out, and it's not working out so well. So gold is not at an all-time high. We still got, you know, 100 and some change points of where it's currently trading at, and it's just not looking good. So we should have some correction back down here. We're gapping above this support area. Should have some correction down here. This 2000 is like a magnet. I think like 4000 is the magnet on ES, 2000 is the magnet on gold. So it could come down here, find support in this channel, confirm this channel, and then we could be pushing even higher. So it's my personal opinion and very humble opinion. The market is due for an extreme correction. I mean, on the ES and on gold. Al Brooks has been talking about the ES coming way back down relatively soon, just because the price action is kind of stating it. So if the market keeps doing this, you can pretty much guarantee the reverse is happening on the ES. It's not looking good. So going to this trade from earlier today, yeah, let me explain that a little bit. So what happened, this was my context, was, we have this strong momentum, just overall momentum going on with the bulls, support at the EMA. We had this big leg breakout. So this was basically two legs, measured move. So the bulls came out of here. There's your measured move. So now we have this. Okay, it's a little bit of a jumbled wedge, but it is a wedge because you have 1 pullback, 2 pullback, 3. Now, once you have a wedge, that is not enough to just go in the opposite trend. You have to have evidence or confluence that there is momentum going in that direction. Typically, you wait for what's called an H2, which means after your wedge is complete, you got some, movement going up, and then you come back down. So here's your H1. This is your first bullish bar. So this would be a reasonable, I would say, trade. This one even more so. But now we have this major higher low. So what I did is, after this tight bull channel was happening, we have our wedge, we have strong movement up, we're above the EMA. Now we have this pull down. So after this bar came back down here and started getting resistance, I put an order in at, I don't even remember, 2042. So hold on, I don't know what I'm doing. So 2042 is where my order was. That's what it was. So I was buying right here as a limit order because people sold down here. So they need to get out before it moves up. But bigger context has more importance. So people have bought up in this area. So they need to get out if the momentum is truly going to reverse. So at minimum, you're looking to get back out. So after you have a wedge or a tight channel, you look for a break of that channel and a push to a new low, or I should say an attempt to a new low. It doesn't always happen, but it does happen. So that is what Al Brooks calls a higher low or lower low major trend reversal. In this situation, we had a higher low major trend reversal. Now, the reason why I was more inclined to go long here was this context was a lot stronger than this context, okay? And on top of that, look at where the bears had issue, was at the EMA. So prices are going to come back to that EMA, but this context was kind of like the perfect pitch right down the middle, and you got to swing as hard as you can. So I bought right here. Initially, I had my stop down here. Once it broke above, I moved my stop to right here, betting that we would not reach a lower low. Now, here's the issue with this trade, and this is where you would really need to be watching the screen for trade management. This is technically, you could say, a Walmart trade where you could set your targets and walk away. That's, Al Brooks talks about that, because sometimes, you see the bar forming, especially on an hourly chart. Each bar is an hour, so sitting there and watching prices go against you, and then they can shoot back up, your emotions can really get involved. So the danger of this trade, because I limit ordered this, my risk was very minimal. But what could have happened if we did not have this context, you could have easily gone into a range right here. And as you can see, that's what the bears were really trying to do. They were trying to get it to contain the damage and keep it within a range. Now, we broke out of this range, which is great. But what do we need after a range breakout? We need follow through. So typically you would wait for, if you got like a nice bull bar here, you could buy above that, and then you're looking to get out at, a resistance level. Or you could stay with it until it reaches 1,000,000. I don't know. But you can see where the transition of a trend goes from a trend to a range. Now we're reversing, okay? I know I've said this previously in videos. a trend has to go into a trading range before it reverses. Has to. We'll say 90% of the time. 90% of the time it has to do that. There are V-bottoms that happen, but if V-bottoms happen, typically it's part of a much bigger range, such as when you're in this trading range. Okay, so here you have your wedge, 1, pullback 2, pullback 3, and now we're going up. But we're inside of a range, so most of the time in the range you don't get full, 3 pushes or whatever. You get 2-legged movements. So anyway, back to this trade. So my look was to, I know people were trying to get out right here. Let me go to the actual trade here. So this was my area of concern, was this bar was going to tell me if I had good chances or not. And after that bar closed, I don't think I moved to break even. I just kept my stop at the low of the open. And this is why, I don't want to say I disagree with Al Brooks, because he's way better at trading than me. But I think the overnight or extended trading hours should be on most people's charts, because there's context that plays into what's happening. Because if I just would have been trading this right here, if I just would have been trading from, this bar to this bar, that would be difficult for me personally to trade, because I wouldn't have an idea of what's going on before. So, I keep clicking that. So once we got out of here, this was really the deciding time of if I felt confident we were going to reach up here or not. We have a very strong bar, bull bar, closing on its high, closed above this high, which was yesterday's high at the close. So this really gave me confidence that we could be actually going to make it to here. So I'm going to fast forward a little bit. So as you can see, like right here, the bears are wanting to stay in that range. They're wanting to get back in there, but it was very short-lived. And once it started going, it fluttered around 11, 12 points, because this gap right here, so this was like the gap breakout, I would say. A lot of people sold. That's an L2, because you had a parabolic wedge, 1 pullback. Now you have another big bar closing on its low. That's a relatively reasonable short, but at best you're looking to get out the EMA, because you have this monstrosity and this monstrosity happening. So after that, I was starting to look. I'm like, okay, I want to make sure my context is correct. So here's the daily. This is why we're having an issue around 11 points, was right there. People were looking at the daily chart at 2055, and that is an area of resistance. So what I did was just, okay, you got to add all these things together. You can't just say, well, we've had this great trend, so I'm going to stick with it. You have to add all the confluence together. So now I back up even more. Here's the weekly chart. Well, where did that wick have an issue with? It had an issue with this resistance right here. So that is a reasonable target, in my opinion, to go for, was the 2064 area, because that's where this bar closed. That's where these people need to get out. That's where the weekly chart shows resistance. So as you can see, we finally break out. And at this point, I'm like, all right, am I just getting greedy? There's nothing to say that this is going to hit exactly to that. Because some people are okay with taking a small loss. If they sold, or if they bought up here and they're like, all right, I'm only down, $10, $15. Yeah, let's go ahead and get out. Sorry, that went away. Let's go ahead and see exactly like that. So let's go ahead and get out around here, and I'm only looking at a $10 loss, rather than earlier I was looking at like $300 loss. So this was kind of what I was anticipating happening, which is not a good word for a price action trader. We don't anticipate, we react. So when the price finally came up, I'm like, you know what, 20 points I made 30 yesterday. I had my bad day the other day, which I lost 180. So if I get 20 points here, that's $200 plus 230 for my day the other day. So that would get me above and beyond of my losses. So I shouldn't be greedy. I need to play it safe. I'm going to get out at this 20-ish points area, and I'm going to close up shop and play video games. So hope this helps everyone. And again, I apologize for not making videos, but as you can see, some things have changed. And I hope everyone's doing well. I know the market's a little crazy right now, but yeah, good luck to you all.